In the quarterly figure, the inflation number for the June quarter has fallen from 1.4% to rise at a pace of 0.8%. And as you rightly say, it might buy the RBA some time when it comes to setting interest rates. The annual rate of headline inflation, which you can see on the screen there, fell to 6% in the June quarter, down from 7% in the March quarter. And that high point you can see is the 7.8% it hit in the December quarter, where economists and the RBA think the inflation rate has peaked. It's the second consecutive quarter of lower annual inflation, and this is known as disinflation. It's also rose below the RBA's own forecast of 6.25% for this period. It made that forecast in the Statement of Monetary Policy back in May. Now, the most significant price rises were for rents, which we know are a big pressure point for households out there, and international travel costs. There were some offsetting price falls in this quarter, according to the ABS, for domestic holiday travel and accommodation and automotive fuel prices. The RBA's preferred measure of underlying inflation also eased, but it's still a way off the 2 to 3% target band the RBA is hoping to hit by mid-2025. I'm going to bring in our guest now, Carlos Cacho, Chief Economist at Jarden. Carlos Cacho, thank you. Now, the RBA is anticipating inflation will continue to fall in the December quarter, hitting around 4.5%. What will the RBA make of this number when it meets next Tuesday?
Look, I think they'll definitely be pleased to see it's moving in the right direction and that it has come in below their and market expectations. However, there are still some pretty concerning rises across a range of areas like rents, insurance, utilities we know are going to go up again in July. And if we put out things like, the big fall in domestic travel, maybe the number is not quite as good as it appears on the surface. So it's definitely good news, but it's not, once you dig below the surface, it's not all as positive as it might seem.
Do you think they'll increase the cash rate from 4.1% next week?
Well, our view is still that another rate hike is warranted, given the strength in the labour market and given the fact that some of the more persistent and labour market sensitive components of inflation are still likely to remain relatively high. We think a fall in CPI to 4% is largely baked in at this stage, but getting it back down to the RBA's 2 to 3% target is going to take a slightly higher cash rate in our view.
Well, then what is that slightly higher cash rate? Where do you see the official interest rate peaking?
Well, we see another 2 hikes still, so we still expect the cash rate to get to about 4.6%. So, we're almost there, but still a little bit more to go here.
Carlos Cacho, Chief Economist at Jarden, thank you so much.
Thank you.